to Insurance Talk with Cheri Martinen and Rex Leseur, the father-daughter team at Bancorp Insurance, located in beautiful downtown La Pine, Oregon. We are coming at you today with some fun stuff.
Yeah, we're going to talk about life insurance. Everybody likes to talk about life insurance.
We know you've been waiting all year to hear about this beautiful product that transfers the risk of
Yes.
an unexpected or untimely death.
From the family or the individual to to an insurance company. So
Yeah.
that's all life insurance does.
I think it does a lot more. It's like, yes, that is the basic premise, but man, it can be a lifesaver for families.
Well, that's exactly what it does. It is a lifesaver for family, and it gives the family a peace of mind in the event that nothing happens. That in the event that a breadwinner or someone in the family who is important to the support and well-being of the family were to leave us unexpectedly and tragically, there's going to be enough money for the family to continue and pick themselves back up and get going back down the path.
Yeah, it is. I think people don't think about it as much as they should. We have, during COVID, we had people in town that passed away, and maybe they were the sole providers for their families, and they left us too early.
Yeah.
And they didn't have life insurance, and I was mad.
Yeah.
So this is one of the reasons we're doing this.
It is sad. It is sad because we know a couple of families who are struggling where there was a premature death, and that is it's something
but it doesn't have to be COVID. It could be a car accident. It could be cancer or anything these days.
And when you think about it, most people die of a medical issue. That's even with car accidents and shootings and everything else, unless you live in the inner city, most people are going to die of the biological means. And these things can come on suddenly from heart attack and so on. We just lost a colleague of ours who worked for SDAO, one of our insurance companies, in his early 50s, passed away from a biological event. So it's something that we need to think about, and life insurance actually can be cheaper than you think, and it's something that every family in this situation should at least consider and look at.
I know when me and my husband bought our house, it was one of the things we talked about, and we bought life insurance to make sure that if the other person was no longer there, the mortgage would be paid off, and they would be able to live in the home without having that bill over their head. Yeah.
So let's talk about the things that happen with life insurance, and I've got kind of a little philosophy, and I call it the life cycle of life insurance.
And you guys will use our voices to draw this beautiful life cycle of insurance image for you.
Okay, so basically, let's make a bell curve. So a bell curve is just a little bit of a bell curve. It starts on the left and goes to the right, and the bottom is a little higher than it is on the left. And why I use a bell curve is because as we go through life, our things change. We have, first off, we get out of high school, and up until that point, or we get out of college, our parents are pretty much responsible for us. If something were to happen to us, they would be taking care of our final expenses. Well, then we get on our own, and we have things like, we buy things like cars, which have payment plans on them.
We were talking about this earlier. They're not like maybe $15 grand anymore. They're 20,
35,
45,
40. I mean,
$80,000 cars.
Yeah, I mean, a truck 20. When I bought my first pickup, it was like 25 grand, and now that same pickup is like $80,000, and so it's a $60,000 mortgage on a truck is unheard of. And then you also get you start families, and you buy homes, and maybe there's a business involved and every one of these things is an asset, and I encourage people to accumulate assets. But if you don't know anything about a balance sheet, for every asset, there's typically a liability. And the liability is that, when you have, loans and mortgages and families and businesses, there's oftentimes people are depending upon you for your expertise and your ability to earn income to make sure that the family thrives and succeeds. And the earlier we are in this curve, the more liabilities we have. And the life insurance is there to basically cancel the liabilities in the event that you have the tragedy of premature death.
And like when you think about that bell curve too, so you've got it going up and then peaking at the top and going down. So we just talked about that going up section.
Right.
We talked about buying a car, buying a home, starting a family, maybe buying a business or becoming a partner in a business. Now maybe you're at the top or the peak of that bell curve. You've got all of these wonderful assets, but that also means if you are no longer there creating income for your family or for the business or providing, it could be catastrophic.
Yeah, and there would be all these people in situations that would be truly missing you and your potential income as an earner. And so this is great. So we know that that's happening. We have those liabilities, but these don't last forever. I mean, hopefully the kids move out of the house. We get them through college, they move out of the house, and all of a sudden that whole part of the curve drops. So now you're coming back down the other side of this bell curve. Then maybe you pay off the house. Maybe once you get closer to your 60s, maybe you're going to sell that business or what have you. And the cars get paid for. There's always going to be some debt at some level. So those things tend to drop down and to the point where at some point the only thing you have left, and this is usually when you're in your 70s and 80s, is final expense. And final expense is a time in your life where there's the only thing that's left to pay for is your funeral and any bills that you might have left for
medical bills.
Maybe some medical bills,
yeah,
and so on. Now, a lot of people in their 80s have mortgages, so that's not necessarily true for everybody. But in general, that's what happens. When the bell curve is like a bell curve in school, there's conditions and there's options and there's everybody's curve is different. So what we recommend is that early in the curve, when you have all of these liabilities and the young family and the new mortgage and the house and you're getting started, that you buy as much life insurance as you can afford, using kind of a formula that you want to pay off the mortgage. So if you have a $300,000 mortgage, which is not a big mortgage nowadays, and a couple of kids and auto loans and so on, you're going to want to be able to pay off the vehicles in the house, set some money aside for college for the kids, so that if there's still an earner in the household, then that earner can make that money, make it easier for them to take care of the kids and keep the household going. This number gets a whole lot bigger if we only have one income in the household. If we have one income, then we probably, instead of having life insurance on both of the income earners in the family, you needed a much bigger policy on the individual that is earning an income. Not to say that the stay-at-home partner doesn't have a value, because if that
partner was gone, you might have to pay a cleaner, or you might have to pay a cook or a nanny, or you might have to, maybe they do all of your books for your business.
Yeah.
You might have to invest in an employee that maybe you hadn't before.
Right. So please do not discount the stay-at-home partner, because
they do a lot.
They do an awful lot.
They do an awful lot. You'd be surprised when you start adding up what it would take to replace them.
Yes. Who's going to do my laundry? So pick a number. I mean, we got to add up the numbers and come up with a number. Typically nowadays, if you have a $300,000 mortgage, you're going to need $500,000 or $600,000 minimum to get you to the point where the family can proceed without making incredibly huge sacrifices. They've already sacrificed the loss of you. Let's not think it's even worse by it being a financial catastrophe at the same time.
Exactly.
The couple things that are interesting, we talked about final expense. I recommend that we buy a term policy. Term policies are the least expensive form of life insurance, and the reason is that the policy lasts from X date to this date, usually 5, 10, 15, 20, 30 years. I recommend that you buy the longest one you can. And then what happens is near the end of the term, if the policy is just going to stop. So you buy this in your early 30s, all of a sudden you're in your early 60s, and you've got, and you still need some life insurance, maybe not as much, but the term policy is going to allow you to convert all or part of that policy into a universal life policy, which you can do without having to prove insurability.
And that's like a nice word to say, a very long health questionnaire.
Right.
To see if you're going to die soon.
Yeah. Well, yeah.
That's literally
okay. And we got somebody living in a cubicle someplace who's going to look at your medical records whenever you buy health insurance or life insurance and say, oh, okay, this person has never been to the doctor. This person has great cholesterol. This person has, exercises every day, and their height to weight is perfect, and that BMI thing is not an issue, and blah, blah, blah. Well, that's more likely to happen when you're in your 30s, but by the time you're in your 60s, you're going to have sore knees maybe, and maybe a little blood pressure. All of these things are going to affect, or even worst case scenario, you do have a heart condition, or you've had been a survivor of some other biological issue that, could be life-threatening, that could come back, or what have you. The term policy allows you to convert as much of that life insurance policy to a permanent form of insurance, granted for a lot more money, but it allows you to do that without passing any insurability test. So they just issue the policy, and you pay, and you can keep your life insurance for as long as you need it.
And like you kind of hinted on this earlier, but there are other life insurance policies besides term. There's universal life and whole life and a whole bunch of other ones, but they tend to be more expensive.
They do, and they're for different purposes.
Yeah.
Universal life is probably used more for people who are planning early for that final expense plan. They may have a larger estate. So life insurance is very useful when it comes to if somebody has to pay estate taxes. I'll give you an example of the farm. And the people who own the farm have built it for years and years and added more acreage. And, mom and dad who have the farm, when they bought it, they got started in their 20s, and now they're in their 70s, and now it's worth $20 million, or even 10. When they pass, there's going to be an estate tax that's going to be has to be paid by the family, usually within 9 months. And so the IRS is not going to take any prisoners. They're going to want to have their money sent to them in cash. And meanwhile, of course, the farm has got all of the assets tied up in land and equipment. And land and equipment is not that easy to sell quickly, especially if you want to get top dollar. And if the market has to be down, then the family doesn't get the value out of the farm that they have. And this is especially true if there's the kids want to inherit the farm and continue the parents' legacy. So that's an excellent example of where a universal life policy would come in place, where the family knows that this is going to happen. They have an idea of what the taxes are going to be. They're going to pay to buy the insurance to make sure that there's enough money to pay the taxes, so they won't have to either go into serious debt or
scramble to sell everything.
Scramble to sell everything, and then the legacy of the farm and the family does not continue. There's lots of other scenarios that could be used with that kind of thing.
And we've talked primarily about individual use of life insurance, but businesses can use it too.
Oh yeah, one of the most things that I wish more people would consider is, especially if there's a buy-sell agreement. Okay, well, if we have a single person owns a business, running it. If he has a lot of debt, that individual needs to have some life insurance so that
their spouse can take care of the debt.
Can at least have some income, or some money to help transition, to help make the business, sell the business, what have you. That needs to be done. So that's the debt cancellation thing still applies to the individual who owns a business. But if there's two individuals owning a business and they're not husband and wife, that they're partners, whether they're just stock holding partners or members of an LLC or just members of an S corp. If one of these two partners were to pass away, the family of the deceased partner now owns 50% of the business, and the other surviving partner has to deal with them. And maybe they're experienced business people who have expertise in the field that that the two partners were in. They might know nothing, and all of a sudden this partner has really basically a negative asset that he has to deal with. The way you solve this is when you set up your business or whenever you're thinking about it, you get together with your attorney and you create a buy-sell agreement, which basically says that if something happens to me, I agree to sell my shares in the business to you for a certain price. And there could be a formula or what have you of what the price will be. And then you, my partner, agree to sell me your shares in the business at a certain price in the event that that you pass away. So there's basically people who agree to buy out the other party, and this is done in advance, so there's no squabbling amongst families and blah 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 when it's done. That's a great agreement, but it needs to be funded, and so the one partner would buy a life insurance policy on his partner with himself as the beneficiary. The beneficiary, if he passes away, the beneficiary, the surviving partner, takes the money and buys off and pays off the deceased partner's spouse. Yes. And vice versa. This is a very, very effective use of life insurance, and it can solve a lot of problems. I have seen a couple of businesses fail in my 30 years where one member died. That was a case, but very big case was three different individuals in this business. One died, and the wife came to the other two partners and said, "Okay, my husband's gone. I want a full share of the profit from the business, and oh, by the way, I don't intend to work in it, or $1 million."
And they're going, what?
And they going, what? And right, and so and she got an attorney, and it was ugly. I mean, literally, they had to bring in a forensic accountant to prove that the business wasn't worth $1 million, and it was an absolute mess.
And it's even harder if it's family. If it's like a sister-in-law or a brother-in-law, it's even worse.
It gets worse. People don't talk to each other forever, and there's hate and discontent. So that's a good use for life insurance right there.
So if you're sitting here, like, listening to us and going, well, golly gee, I need life insurance.
Or at least we need to talk to somebody about how it would work for me.
Yeah, because like we said, that term insurance really is affordable. Guys, if you're in your 30s, you could probably get something for under $30 or $40 a month. Obviously, the older you get, Rex kind of hinted at that with that underwriting. Sometimes they ask you questions, and unfortunately, we don't stay young forever.
Yes.
And we actually use our bodies, so they get a little wear and tear.
Yeah, they do. Mm-hmm. So it gets more expensive the longer you wait. I also recommend that if you are a smoker, that you quit. Because that's actually a big factor in the rating of life insurance. Smokers pay 15-20% more than non-smokers.
Yeah, it's definitely one of the things they first ask before they even do anything else.
Yeah, are you a smoker? And then they dig into your health. They'll actually send out in some cases they'll send out a nurse to your house, and that nurse will come in, bring her own scale, and she'll actually her own tape measure to make sure that she knows how tall you are. She won't let you guess how tall you are, because we've seen people all of a sudden become taller.
As the weight goes up.
Yeah, they get taller. So it's all about your height to weight ratio. So you're really not overweight. You're just not tall enough, and they'll take your blood, and you get to pee in a cup, and take your blood pressure, all of the things that you would do for a medical. Yeah, because insurance companies will get up and be putting $300,000, $400,000, $1 million on the line based on your health, and they want to have a clue, how you doing.
Yeah, they want to make sure that you're going to live the full term.
Yeah.
I think they would prefer not to pay it, and in all honesty, we would hope that you didn't have to collect it.
Either, yeah.
Yeah.
And those kind of services are free. When the insurance company does that, they'll come out and do that, and that's all part of the process. That's and even if they say, "Oh, you're not healthy enough to buy the insurance," there's still no charge.
Yeah. So this is
A deep subject. There's a
This is
lot.
a deep
There's a
subject.
lot to talk about.
Yes, I would recommend either talking to your agent or calling our agents at Bancorp Insurance, 1-800-452-6826. You can visit us online at www.bancorpinsurance.com. You can make an appointment there as well.
Yeah.
Say, hey, I'm interested in life insurance. If you're a current customer and you don't have it and you're going, oh my God, I need to get this, go ahead, send an email to your agent and we'll get that started for you.
All right. Thank you very much.
Thank you.
Bye.